Hello traders and welcome to another video review. Today is Tuesday, August 16th, 2022. Let's find out what is going on today on the markets and what the Forex calendar is showing us. I have selected only the most important events for today. So what do we have here? We got the RBA meeting minutes published already overnight at 3:30. So we will definitely take a look at the Australian dollar during the technical part of this video. However, we got more data published already. From the UK, we got average earnings index and bonus. The average earnings dropped from 6.2% to 5.1%. However, it's still better than the forecast of 4.5%. We got climate count change, so the data from the labor market in the UK, minus 10,500 people the last month. So this is way better than minus 32,000 expected. So kind of at least positive data from the UK. We got German ZEW economic sentiment data. This data are scheduled for release at 11 a.m. The market participants expect the number to be in line with the previous reading, minus 53.8 points. During the New York session, we got building permits from the US scheduled for release at 2:30. Again, house marking data and core CPI, Consumer Price Index data from Canada are scheduled for release as well at 2:30, and the core CPI last month was 0.3% in Canada. So it will be interesting to see whether the core CPI will increase or decrease in Canada. So that might influence, of course, the Canadian dollar rate. So very important events here, plenty of them. Almost every few hours we got something here on Tuesday. So let's find out what is going on the charts. We will start with Australian dollar. Daily time frame chart of the Australian dollar, very nicely showing us the recent bounce from the lows of 6,684 pips. We moved higher, way higher, exactly 6.78% higher, towards the level of 7,139 pips. We broke above this short-term trend line on a daily time frame chart right here. Then we tested again, and then moved up again. We continue to moving higher. So please notice the two very interesting things on this chart. First thing is that the last bounce, last correction, this is the upside correction, of course, was 6.63%. This one was just slightly higher so far, 6.78%, almost 100% in the term of the correction and the target level. So the geometry of these two corrections is almost the same. So we can if we compare it, we can even say they are equal, right? 100 and 101% equal. So what is going on right now? Second thing, we almost hit 50% of the Fibonacci retracement of this whole big wave down. 7,174 is the high. This high is 7,139. So this is a miss of 35 pips. Okay, not that much if we consider a 6% rally from the bottom. And then look at this. We got big red bar just after the failed rally towards 50% of the Fibonacci retracement, and today it looks like we have a continuation being made on a daily time frame chart. However, please remember this candle is still not closed. This is a daily time frame chart. We broke below the first technical support, 749 pips already. We tested it, as you can see, and now it looks like the market is trying to move even lower. We are above that trend line. We are above the 30-day moving average. The 30-day moving average is 6,924 so far. Momentum is still positive. However, it is a weak momentum, but it's still positive, and the bulls control the market right now. If we consider the fact that this is a correction to the upside, this is almost the same in terms of range correction to the upside. Well, we might assume that, okay, so this there is no overbalance and we should continue the downtrend. All right, we are below the 50% Fibonacci retracement, below 61% Fibonacci retracement. However, we are above the trend line, above the 30-day moving average. What do we do now? Well, with as long as momentum stays positive, we should consider another swing to the upside. And as long as the price stays above the 30-day moving average, above the trend line here, the orange, thick orange line, and above the key technical support, 6,854 and 6,831, the outlook remains rather bullish. Okay, so if we break, of course, this levels here, break back below the trend line and below the moving average, the outlook is changed to more bearish, and it looks like the low of 6,684 will be tested soon. So that's my outlook for the Australian dollar. Let's find out what is going on the British pound, because we got data from the British economy. Let me just zoom in. This is a daily time frame chart, but I'm doing my 4-hour analysis as well on this one. So let's just switch to the 4-hour. Maybe this will be a little bit better. There you go. This is a 4-hour chart. And what do we have here is a very, very typical price action for a double top. Where is the double top? The first top is here. This one is a little bit lower. However, it's only around 18 pips between this high and this high, and we have a very, very strong indication that this might be a turning point for the British pound, because we got bearish engulfing, we got the test of the channel. This is ascending channel, broken ascending channel, then up for the test, very big, nice green candles, completely retraced. Right, we are getting close towards the weekly low. If we break below 1.2003, then of course this situation will be much more clearer for bears, because the activity of bears might even increase. Why? Because they want to put the prices back below the thick orange line, which is the short-term trend line. We are out of the channel already, so please be careful with the trading very aggressively to the upside. All of these nice green candles had been retraced. Momentum remains negative, and it's quite a strong negative momentum, 37 points only, and there's still some room to the level of 30. So I guess that there might be some spikes towards 1.2003, 1.1916 even. Sorry, first is 1.1965. So please be careful with the spikes here. Maybe some kind of a pin bar, maybe bullish engulfing patterns. This is 4-hour chart, so it might be quite visible what is going on this lower time frames below, of course, daily and weekly. And the trend on the daily and weekly is still down. The long-term trend on the British pound is still down. Please remember, trend is your friend. So we will consider this move here from the lows of 1.1760 towards the highs of 1.2292 as a corrective movement to the upside during the downtrend. Okay, so this is my outlook for the British pound. Let's take a look at the Canadian dollar. What is going on there? This is a 240 minutes chart. However, we will switch to the daily. Why? Because we can see clearly the V-shaped reversal from a very interesting level. I think it might be some sort of the Fibonacci level. No, it's below the 61%, so we'll not consider it as a Fibonacci reversal. However, we will definitely put a line on the chart. Horizontal line at 1.2726 is telling us that this is a kind of a nice technical support for the price. We got the V-shaped reversal here, and the market is trying to rally even higher. Where is our level? Where is the level of the technical resistance? I think we should consider this zone here between 1.2964 1.2986 as the zone of the supply. So if we break below this continue this level, the market has a chances to fly higher above 1.31. However, if we get capped here again, we will definitely go back below the 30-day moving average and then test the loss of 1.8726. Please notice the fact that this formation, cap and a handle, was a correct formation. We made as new swing low 1.3221. However, it was very shortly retraced. So the market right now on the US dollar to the Canadian dollar doesn't actually move in any kind of a strong trend, and please consider this into your analysis and trading strategy as well. This is a trendless market which will go up and down, and so far doesn't produce any strong trend in either direction, and we can see that by the behavior of the momentum. We got the movement to the upside, breakout above the level of 50, neutral level, then down, then up again. So this market is undecided. Most likely it will be trading sideways for quite some time, unless one of the key technical levels is clearly violated, and then of course the market will continue the move in that direction. So that was the US dollar to the Canadian dollar. Let me find out what is going on the oil market. So what do we have here? Daily time frame chart of the crude oil showing us that let me just zoom in a little bit. Is showing us the bearish pressure on the crude oil. Big zone. Market as a green rectangle on my chart is right now violated. Moreover, it was tested on the 11th and 12th of the August this year, after the new low at 87.56 was made, and then even lower low yesterday was made, 86.83. So it looks like bulls were rejected from the zone. So right now this will be supply zone. Of course, the green rectangle will be supply zone. Let me adjust my channel to the newest data. Here you are. There you go. Pin bar, bearish engulfing, clear, new low. So the valid bearish engulfing. We should see lower prices on the crude oil towards 84.92, and then, if I remember correctly, we got even bigger gap towards any of the important support. There you go. After 84.92, the next nice technical support, the next important technical support might be considered the level of 81.96. However, as you can see, the other one is 66, and then is even $63. So please keep an eye, especially on this kind of a zone here that was attacked before very strongly. 81.96, 84.92 is the next target zone for bears. The momentum remains negative. The momentum is weak, and it's still, the bulls are still under the bearish pressure on crude oil. We should expect down move to continue. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.